Hi, my name is Lubabalo Kenyani. Welcome to the INN8 Invest monthly update. After a difficult third quarter, equity markets rallied in October. Global equities produced 8%, while domestic equities were up 5%. SA property, similar to other interest rate sensitive sectors like financials, shot up 11%. In fixed income assets, both locally and globally, the returns were roughly about 1%. The rand lost about 1.5% relative to the dollar and has lost about 20% in the past year. Recent returns from your growth assets have helped improve the one-year returns. Looking at the performance of the funds, 4 of the 5 models that we manage performed largely in line with their benchmarks, with the flexible growth portfolio outperforming this benchmark. Within the flexible growth fund, it was the Stanley Multi-Manager Global Equity Fund that contributed the most to performance. This was not surprising given that your global equity markets were up 8%. Within the other funds, in flexible income, Granite Multi-Income's exposure to government bonds as well as SA property helped its performance. In stable, moderate, and high growth, it was particularly flexible that contributed the most to performance. In that fund, it was its higher allocation to both SA and global equities that helped its performance. And within those equities, stock selection was also positive. Outside of Patalia, One Invest as well as MNG were the 2 other funds that also contributed positively. Our defensive managers in October struggled as the markets rallied. Aluwani, Prescient, and 91 are some of the managers that we look up to when equity markets sell off. It was not surprising again then that these managers led in the month of October. In Truffle Flexible Fund, it was stock selection decisions that detracted. But having said that, we have seen those same shares rally post the end of October. Looking at the macro environment, market returns are likely to be driven by the path of interest rate hikes in the next couple of months. If the path resembles your Mount Everest, that is a short, sharp peak followed by interest rate cuts, you are likely to see another rally in equity markets. But if that path resembles your Table Mountain, which is a higher for longer scenario, we are likely to experience a recession and equity markets would fall in that environment. Regardless of which one of these scenarios plays out, the models have exposure to higher quality managers that can navigate such uncertain environments. We thank you for your continued support.
INN8 is a registered trademark of Stanlib Wealth Management Pty Limited, an authorized financial services provider.